Hey everyone, Tony here. Wanted to bring you a new stock today. We're going to be talking about Amazon, and wanted to start off with some of the um, fundamentals, just a brief look at them. So Amazon, for those who don't know about it, would be insane. Um, Here the description says Amazon Inc. engages in the retail sale of consumer products and subscriptions in North America and internationally. The company operates through three segments: North America, International, and Amazon Web Services, which is, by the way, one of their biggest moneymakers. It sells merchandise and content purchased for resale from third-party sellers through physical and online stores. Um, and then it just keeps going, you know, into everything. But basically, they own Whole Foods, Audible. They're everywhere. I mean, Jeff Bezos has done an amazing job with Amazon. On the numbers, so we got a PE ratio of 93.84, which is expected of growth companies, which is really high. It's not what you would be looking for as a value investor, but as a growth company, it's high, but it's pretty much what you would expect. Um, Book price per share $125.12. Considering that the stock's at 2,156, it's not great. It's got some earnings per share estimate next year of going up from 15% to up to uh, estimated to go up to 40%, almost 41%. Now take that with a grain of salt because you just don't know what's going to happen there. So on the fundamental side, I mean, it's Amazon. It's expected to keep growing and keep giving some more profit. Um, so wow, it's got employees, 798,000 employees. That is insane. So let's look at the analysts. So the analysts say that they're pretty much at a buy or an outperform with an average price of between 2,200 going up to 2,400. So we'll take a look at that in a little bit. And then speaking of Mr. Bezos, Mr. Bezos has been selling lately. So the insider trading has been mostly sells, only one buy, and that one buy was January 2nd for a mere 100 shares. Now, granted, 100 shares is $187,000 at the time, which is, it's for one person to buy. I mean, it's decent, but compare that to Jeff Bezos selling in the last 2 weeks, basically from January 31st. He sold once, two, three, four, five, six, seven, 8 times, and the lowest quantity of those from his sale shares, 26,399. So that one sale was $54 million. So just think about that. So that was the lowest sale, and he's gone to sell as high as 405,000 in the last 2 weeks. By the way, this is no joke. $405,000 for a value of 823 million freaking dollars. That's next level. That's next level. So yeah, good for him. I mean, I'm glad somebody's able to do that. So why would Jeff Bezos do this? I'm not really sure. I haven't been following up too much, but I would expect that if any insider, especially Jeff Bezos, is selling, it might be because the stock, either he's trying to fund something else, maybe he's trying to do some sort of investment, or would make more sense in my point of view is that he thinks that the stock may be on the higher end. Maybe it's due for a pullback. Um, so let's jump into that. So let me make sure I'm still recording. Had a couple hiccups earlier and would not like to redo this if possible. So we are looking at the monthly. So on the monthly, let's draw a couple of trend lines. And my technical analysis, in case you haven't seen some of my previous videos, I try to just keep it pretty simple, and I start off with a really high time frame. So I start off with with a monthly, and just dig my way into the daily, because I guess some people may look more into the intraday time frames, like the 4 hour, the 1 hour, the 30 minute, 15 minute, 5 minute, but for the sake of these videos and just kind of getting a you know, like an overview of the stock, I try to just keep it that way. So anyways, on the monthly, let's keep it simple, draw a couple of trend lines. So if we want to just go from these two lows, and I'm on a log chart down here. I don't know if you can see my cursor, but it's on a log on the bottom right of my screen. But we can kind of play and do one of these and see how these two bottom, actually this would be better if I zero a ray. So we go from this low to this low down here. And funny enough, so drawing from this low to this low, we draw a ray, extend that out. It's basically an extended trend line. We see that it's respected it quite a few times. It's actually been a pretty consistent, it's been pretty reliable since 97. So from 97, this trend line, so a trend line from 90, a ray from 97 to 2001, the stock has obeyed until now. I mean, it's still obeying it. I mean, it's acted as support once, twice, broke through, resistance a little bit, broke through, acted as support, kept on the upside of that, bullish, broke below it, acted as a resistance, a little bit bearish, broke through, down, up, down, up, down. Right now we are down, testing to try to go on support again. So that's a heck of a trend line there. So let's keep that one on the chart. I guess this one you can take out because it's not really showing as much. It's not as relevant. We want to kind of keep things as relevant as possible. So we'll try to draw from this low to this low and see how that looks. And let's draw a few horizontals. So let's go from, let's see what would make the most sense. I guess here might. Again, this does not have to be precise. Oops, button. So we have one approximately here. What am I doing? Okay, sheesh. My commands aren't working very well today, so apologies for that. So we have approximately a horizontal there. We can even go here where actually that will be probably better because we have a test here. We have a wick that tested there, and we have these that kind of fluttered around the area. So that's good, but that's way down there. So let's try to zoom it a little bit higher up here. And it's kind of hard because it's just been kind of parabolic since 2008. It's been pretty much parabolic. So it's kind of hard to draw some horizontals, but you can argue that there's one right there. Again, that's so far down considering that we're at $2,000. So let's go all the way up here. And I think for this one, we might have to go through a weekly to get just a general idea of what's going on in this region. But draw a horizontal there and give or take one around there. So we are above this horizontal. We're testing new highs. So some people may say that this is looking double toppy. I would say, oops, I just noticed that my head once again is being attacked by the mist. Hopefully that is a little bit better now that you're here to see my face, but whatever. Where was I? Okay, so it's some people might say it's double toppy, but it actually broke above this high here of give or take 2060. Broke past there on the monthly, so I'm not so quick to get bearish on it, especially if we close above this trend line in 15 days. So yeah, it's looking strong. The RSI is still in the bullish zone. It hasn't dropped under that 50 line in a long time. So let's see here. The last time it broke through was 2008. So ever since it's tested it, but it's bounced right back up. Can't get more bullish than that, in my opinion. We were a little bit extended here. We had a brief pullback. We didn't even test the 50, and now we are above what are we? We're at 68. So it's bullish. The stochastic looks like it's decent as well. So let me try to draw a trend line here. You can see that it's basically obeying this uptrend here on the stochastic on the monthly. So we have that, and then we have, I don't even have to draw a trend line. Some people would do this. So it broke through that and it's going on the upside, but it's not very clear to me. I don't see really divergence here. There's some of it that actually coincides. It looks pretty bullish to me, to be honest with you. So let's take some of these out and let's go into the weekly. So on the weekly, we're going to be looking at, again, we're not going to zoom out to 2008 or something like that. It's amazing that this stock has gone up so parabolic for so long. Not really parabolic, to be honest with you. This is not parabolic. This is actually a healthy trend. I believe, I wonder if this one's going to tell me. Let me try to get the angle here. Show angle? Show. Oh, there we go. So 24-degree. I wonder. Yeah, so if it is 24-degree, it's a little bit of a steep side. Let me see what this one's at. That one's 25-degree, yeah. A healthier angle would be closer to 45. Again, nothing's going to be exactly that, but it's actually, well, I'm sorry. What I mean is, on a typical uptrend, you're looking at a higher degree of 45. So 25, obeying that 25-degree or 22-degree, whatever it was, is actually healthier because it's a slow climb versus a steeper climb, which means a quicker fall off. So sorry for mixing that up. It's been another relatively long day of meetings, so bear with me. So yeah, again, it's pretty bullish. On the weekly, we see that we barely touch. Yeah, again, going back to 2008, we haven't touched a 200 EMA. We've tested the 50 looks to be more tested, but even then, you can see that it breaks through, but it doesn't really act like a nice little test. The 20 EMA, which is this yellow line, that one does seem to get respected a little bit more. But of course, you're gonna get false readings, so you don't want to trade the crossovers to that because then you're gonna be trading. Well, on a weekly, it may not be a bad idea because then you're on so you have this section here, which is consolidation, and then a break above it. So let's assume that you bought here at 764, give or take. You were on the upside from 764 all the way to a broke for this little consolidation period of 961. That's not a bad little area if you wanted to cross over and then buy back again when it crosses over 985, give or take. So once again, you have this uptrend, a couple touches, but it doesn't really break through. So you're still in on this trade until it breaks down here. So 1,800, that's almost $1,000 of upside there. So on the weekly, if you were just simply trading this 20 EMA, it's not a little bad one to go by. Here we're at, so had you bought in, and so recently we're actually testing. And when I say recently, again, we're on the weekly. So we go back to October of 2018, so a year and a half, give or take. It's been, not only did it break through the 20 EMA, but it tested the 50 EMA and then broke through that for quite a while. So we had a little bit of that was that little 2018 bear in December. And it looks, just briefly here, it looks like it actually did well compared to other stocks. We can actually see how low it went, and I assume that was around the 618. Keep doing this. On the Fibonacci. So yeah, just broke a little bit below the 618, which is a healthy. I mean, it's pretty much a second stop in my point of view. Some people say the third, so the 382 would be the first stop. The 50%, which is not a Fibonacci level, but some people call it that. That is I'm just looking at the camera. And I forgot I'm wearing a white shirt, so it looks like I'm half disappearing on you. So bear with that as well. 382 being the first stop, 50%, not a true Fibonacci level, but it does get obeyed quite a lot. So some people consider that a second stop, third stop, fourth stop. I like to see it more like a first, second, third. Doesn't really matter. Whatever you use, as long as these levels of support and resistance are obeyed, that's all that matters. So so we had what I would consider to be a healthy retracement, and then back up. So we haven't actually broken past those highs of September 2018 until 2 weeks ago, or actually last week. Excuse me. So yeah, so we're basically at new all-time highs. Woo! So if you're on this trade, on this stock, congratulations. I am not. Not because of anything. I just never really got into Amazon, to be honest with you. But hey, long term, killer. So let's look at the. Actually, let me try to draw some weekly trend lines here. So that looks like it's give or take obeying there. Yeah, so I would be especially bullish if it just maintains above this trend line here, and especially bullish if it breaks above this and keeps riding this particular trend line here, this yellow. I keep forgetting that you guys can't see my cursor. I'm gonna see if I fix that somehow, but hopefully you guys can see that little crosshairish thing. So that yellow monthly trend line we drew at the beginning, if it breaks above, the price breaks above that trend line and maintains above that trend line, then it's no reason to get bearish, to be honest with you. So we broke above this horizontal, which was key. We're above this trend line right now. If we're able to close in 15, wait, actually, this is on the weekly. So the weekly closes in a day. That's right, tomorrow, Friday. Time's going way too fast. So yeah, so we're able to close there. Then yeah, it just looks good, to be honest with you. So let's go on the daily. So on the daily, we have a nice little gap here. Some people don't prescribe to gaps. I've seen it be filled more often than not. So I would yeah, I don't know. I don't even. Some people claim it's all BS, but I think somebody claims that gaps get filled 80 or 90% of the time. So hey, you want to go that route? It's not a bad idea. There's a big gap here, so that's $1,000. So I mean, that's a 50% retracement. Jeez. So let's hope that doesn't happen. Even the bearish of bears, I think would hesitate at that one. But a more realistic. So let's look at this gap here, which happens to be just above this horizontal. So that's kind of funny. Let's draw. I'm gonna draw two. I'm gonna draw it from here, which to me is the most logical. So we have going down to as low as 618, the 61.8. So that would make sense. And that would actually not be bearish, really. That would just be another healthy correction on its way higher. I don't see real divergence. I mean, we had some brief, nothing that I can call RSI divergence. I always try to look for the downside on things. Not always, but I try to see the positive and negatives, and it's looking pretty healthy. On the daily, yeah, it has tested the lower side of the RSI, but when you look at the more macro, the weekly and the monthly, it's just crazy bullish. So yeah, should this be a little local high here? I could see it testing that the 50 EMA, which is the red line that I have here. So it's funny, that gap happens to line up almost perfectly between the 20. Yeah, not the 200. The 200 is purple. the 20 EMA and the red 50 EMA. So that's I can see that being, price, being pulled down to those levels for a test. The horizontals there. So first stop 382. That makes a lot of sense. So that just makes sense. So now let's say we want to look at the upside. There's actually, let me try to do this one particular one here, and then I expect that to get filled in, that little spot between 2000 and 1894. So let's say between 1900 and 2000, I can see that being filled in before continuing higher. That wouldn't be bearish at all in my perspective. I know some people will see that happen. They're like, it's going down. Yeah, don't freak out. So let's draw to see where we may look for some upside targets. So let's go from this swing low to this swing high. Let's go up there. So, and then we just come, keep doing this. Click, extensions. All right, so yeah, I think the next logical point on a bull run is between the 1.272 and the 1.618. So between, funny enough, those analysts, I believe they were between 2200 and 2400. So yeah, that's probably where they're getting their targets from. It's just a very common profit-taking point, especially at the 1.618. I can see that would, I can see that happening. I can see either, there's no guarantees, obviously, and nobody knows what the heck is going to happen. But if there's two logical, at least for me, from my experience, I could see it doing a quick pullback, filling in that gap, and then going up higher to hit between the 272 and the 618, the 1.272 and the 1.618. I just want to make it clear. And then, or continuing up between the 1.272 and the 1.618, and then rolling back down and filling some of this gapish area. I want to say that maybe we're going to pull back down, fill in, and then go higher, but who knows? There's, nobody has a crystal ball to look at. But besides that, I don't see anything being that, there's no reason to be a Debbie Downer on, barring any fundamental or news events, because that will always trump technical analysis, no matter how much technical analysis you do. Actually, I just realized I drew this from the wrong peak. So stay. So we're still at the 2200 after correcting that fit, and 2500, give or take. That makes sense. So not too radical of a difference. Now let's try to draw some ABCDs, and not everybody, but a lot of people draw these differently. I think at the end of the day, as long as you have as long as your ABCDs are from a swing low to a swing high to another swing low, I think it should be A-okay. Now this obviously is going to be here, so it's probably going to be already met here. Just double check. Yeah, so that would have been pretty much at the horizontal. So it's funny how it just gapped and landed straight on that horizontal. I don't see, I guess, I mean, we don't have to wait for a pullback, but if there were a pullback to, let's say that it goes as, we have a brief pullback that goes to this horizontal, where would that leave us? And that will leave us pretty close at 1.618. So obviously this is hypothetical. I'm not pretending I know what's going to happen. I don't know. But if there's a logical point where we might hit and bounce off to the top of this gap, which just happens to be the horizontal as well, the upside target of a 1.618 at 2486 to 2500 looks likely. Yeah, it just makes sense. So I think that's pretty much it. Again, on the RSI, there's no bearish divergence. It's on the high side, but it's a growth company. You expect it to be, especially with its up. I mean, it's just been growing and growing, so it's gonna be touching those every so often. You see over here, January 18th, all the way to the left, right above my head, actually. We were quote unquote overbought, which doesn't really mean much. It just means, uh, especially if it gets pinned up there, it doesn't guarantee that it's going to roll over. That's not what it's really supposed to tell you. It just tells you that the stock is strong. There's no rule hard and fast saying, hey, look, we just touched oversold, so we gotta, if it's oversold, then you gotta buy in, or here in the red areas that it's overbought, that it's going to roll over. There's none of that. So I think a lot of people misinterpret that. You can see, I don't know if you can see it here, but I think if we roll back to the weekly, we might see that it gets pinned there for a while. Stochastic for sure will get pinned up there sometimes, but yeah, I don't see it being. Oh wait, no. Explains a little bit. Actually, yeah, I don't see it being pinned there. Maybe on the monthly. Yeah, not much, not much. But sometimes you'll see some stocks will get pinned in the oversold region for a while. You know what it is too? I also have my RSI at a higher level. Stock is usually around 70. 70, anything above 70 being, whoa, what happened with my head here? Anyways, bear with me there as well. So stock on the RSI being 70 and above being the oversold, overbought regions, and 30 and below being overbought or oversold. God, I always switch those up. 70 and above, overbought. 30 and below, oversold. Yes. Good Lord. I pin those to 80 and 20 respectively because I like to see extremes. It's just the way I am. There's no right or wrong. It's just I like to see when things are really, at more of a red line. So yeah, that's basically it. I see Amazon strong. I really do. Again, any fundamental news, any all this coronavirus stuff, all this, especially most items being made in China, there could be some delays and slowdowns that can cause some issues. But overall, in the macro, I just see Amazon going higher, especially with them getting into all kinds of things. Whole Foods, Audible, they're always buying companies here, left and right, not here, but just in general, they're buying stuff left and right. They're growing and growing and reinvesting. So it's a pretty strong stock. And yeah, that's basically my brief analysis on it. Well, I don't know how brief it is, but I've been recording for almost 30 minutes. So I'm going to try to wrap this up now. I can just draw a few more horizontals just to kind of get us. I think that's a decent one there for like a probably low, but yeah, I think I'll just leave it there. Would I buy up here? I would wait for a pullback if you're bullish on this on the stock. So let's say you're really bullish and you're looking at the daily as a buy-in point. I would at the very least look at that previous fib that I drew, and here. Yeah, I would look at that horizontal as a target. To be honest with you, I don't know how much more it's going to pull back, but it could pull back. I mean, it typically always does pull back. So if you're patient, I would wait for a touch of this yellow trend line, which looks like it may, depending on what day it goes down and eventually hits, it most likely might be the 618, which would be around the 1950 level, 1950, 1960. But again, this is going to keep, as the days go by, that price target keeps going higher and higher. So if you're bullish, those are the targets that I would buy between the 382, so 240 all the way down to 1950. If you're more aggressive, if you think it's going to go down, you can set your buys, and hopefully you get filled. There are you can look at larger, especially like down here, and you can look at the 382. So for this 382 to happen, you would have to have a wick that breaks that trend line, which could happen. That 382 is actually, it would obey this bluish trend line that we drew from this swing low to this swing low over here. I guess I can correct on the daily now. But again, as the days go by, I mean, for this to be met at the 382 on that blue trend line, it would have to happen by March 1st. So you're looking at 2 weeks. So that's a pretty drastic drop. I don't expect that happening. I expect some resistance here, some support. I rather say, it's not resistance until it breaks through and tests it. So yeah, I would expect. I would personally look at this level here, these levels here, or more likely here. So yeah, once again, between the 382 and the 618. So 2000, just the gap. I think the gap is a good target. So to end this between a low of 1875 and 2000, and then what would be pretty smart would be to just average in. So let's say you have a buy order at either this horizontal or this 382, and just have maybe a percentage of your whatever money you have allocated in your portfolio to buy into this stock. A little bit here, a little bit on the 50, a little bit on the 618. If you want to go crazy, you can put one at the 786 and just see if it gets hit with some of this coronavirus, and maybe there's some possible delays. And then if you're a long-term investor, then you don't really care about what happens tomorrow or the next day if it rolls down below that. Yeah, that's basically it. So hopefully you found some value in this. We are at 32 minutes in, and these videos keep getting a little bit longer, so I'll see how that goes. And if you like this video, share it with your friends, hopefully somebody you like, or even people you don't like, whatever. And I'll keep trying to work on improving the freaking lighting here, but whatever. Subscribe to the channel if you can. That's going to motivate me to keep posting more. My current schedule is Monday through Friday. It's basically there's no hard, fast, set rule on that. It's just Monday through Friday. And but maybe I'll do something on the weekends. Maybe I'll do some different assets or something. I don't know. We'll play with it. All right, everyone. Thank you so much. Take care. Until the next one. Have a good day.